Your take on the oil price, what we're seeing more broadly, because obviously we saw the bounce last week. Now that this meeting's been deferred until later in the week, we have seen a bit of a dip in the oil price today. What do you make more broadly of the trend?
Well, it's incredible, Ingrid, when you think about what's happened in the last matter of days, up, the best part of 25-30%. I'm not surprised that they've had to, push the meeting back a couple of days. It just makes sense. It was probably a little bit rushed through. There still hasn't been a decisive move as far as Russia's standing on the whole matter. So I think it's just still a work in progress to try and, line up everyone and see where it goes from here. But the demand destruction, I think, is really the headline that's creating so much angst in the market. Some people are saying, analysts, 35 million barrel washout. So it's just monstrous.
But is it a bit more like that? Line everyone up in advance, then send out a tweet, then hope that you can keep everyone in that line. I mean, ultimately, there's no one who has given any clear indication as to how many barrels they'll cut. Or what do we need to see from each trading partner to get this deal done?
Well, when you're thinking about Russia and you look at America and the Saudis, you're looking at the best part of about 35 million between them. Now, I'm not sure whether anyone's going to put their hand up. I think if you start at 15 million and work from there, it would be a fairly objective sort of number. Now, there needs to be a lot of work done to actually achieve that. You're talking about OPEC. They only produce around about 34 million barrels a day. So there are other producers and other nations that need to come to the party, and I'm not sure whether that's going to wash through. So I just think it's going to be a hard one to materialise. I still believe that it's going to be nearly impossible to put a deal together, and if they don't, I think oil prices will crash from here.
Well, deal aside, what assumptions are currently in the market as far as global lockdowns? Obviously, once people start driving again, there'll be a bit more natural demand. What happens if this lockdown increases? How much is baked into the price?
I feel as though that there's a lot of speculation driven into the last matter of days. It's really, pushed the market very, very bullishly from that $20 handle as far as WTI. We're talking about demand destruction. We're talking about summer driving season starting in May. The whole US really gets engaged from a vacation sector. So does Europe and all really pretty much the whole Northern Hemisphere. Well, that's just not going to happen. The next part, of course, is you're talking about Mother Nature. They say they're going to be an increase as far as hurricanes. So there's really going to be some major impacts, I think, going to affect the oil market this year. And take all that on board, where do you put a price? So that's where traders are really, having a field day if they're on the right side of the trade. It's just been incredible, as far as from a whipsaw volatility standpoint.
Is it in the best interest of both Saudi Arabia and Russia to come to a deal with this? Obviously, this has been a month-long oil price war between the two. What might we see over the coming week?
Well, if MBS can put a deal together with Putin, we know that they're fairly strategically aligned. But the other side, of course, is what does Trump think about the whole matter? Who's going to be the major input? I would say that Russia will come to it in some capacity, but I don't believe they'll be leading the charge. They need high oil prices. A whole lot of them need to, really have an increase as far as price. And I just feel as though that this is uncharted waters, Ingrid. We haven't been down this pathway for probably 30 to 40 years in the sense of price destruction. So this really is uncharted territory when it comes to the crude market, and that's been demonstrated in price over the last matter of weeks.
And speaking of price destruction, we've seen ExxonMobil actually put into the wording of their contracts a zero cap on pricing so that they're not forced to actually pay a buyer to take away their oil. I mean, how does that speak to just the extraordinary situation in this market right now?
Well, I'd say that all the other major producers will follow suit. It just seems to be, the force majeures, all of the shipping industries, whatever happens. People are just taking the lead and they're going out and just creating their own, not only interpretations of the market, but their own risk management metrics, and they're protecting their own balance sheets. Some of these companies they've hemorrhaged. When you're talking about, wipeouts, it's just been dramatic. So I think that will only remain over this coming April period. We don't know what will happen in May or June, but I'm pretty sure that it's going to be, in some ways, a softer market from here.
Well, as far as we don't know what will happen, of course, but just how long can these US shale providers hold on for? They need oil approximately $35 a barrel just to break even. How many months can they hold on if oil sticks in this 20 range?
Well, 30 to 40 is what they need. They probably need a little bit higher than that. One way they've been, giving a fairly strong US dollar, so that's a plus. But I feel as though that you'll start to see, a lot of those rigs and people just walking away from the actual, from a drilling perspective, quite simply because it just doesn't pay. Keep it in the ground, wait for it to come back as far as a higher price. And that's one thing about the crude market. It's not as though it's wheat or another commodity. It doesn't really go off. So it's in the ground, it's safe, it's there for many years to come. And sometimes it's best just to walk away and go home and be safe from coronavirus.
Where to next for gold, Peter? Always an interesting one to look at. There's some talk about some bull fatigue potentially coming. We're seeing that on a few signs of that on the weekly chart. But what are you watching going forward into next week?
Got to be stronger from here, Ingrid. I think the uncertainty. Look, we were beat up pretty well with the Nikkei and the Aussie today. Let's see what happens as far as the rest of the day when we roll across to Europe and then also to the UK and then leading into the US tonight. I still believe that that US dollar is 100 to 100.5 on the US dollar index, so it's been well bid up, very, very volatile, and I feel as though that the gold market will continue to have an upswing from here. There's no reason why you won't see 1700 over the next quarter. It's got the momentum to take it there. It's volatile, and you'll get those big whipsaws that'll force the market to be stronger from here.
Is that also because it's just so hard to get people's hands on gold bars right now? It's very difficult to come by, according to global markets.
Well, they're saying that from a jewelry perspective, and there might be. I think there's a lot of buyers out there naturally. When you're looking at the Indias and probably China from a fear metric, and certainly the Middle East, derivative trades are very, very strong. And when you're talking about any form of leverage, traders are all over that market. So yes, from a physical side, I'm sure that there's constraints, and from a derivative side where you've got leverage, it's a very, very well sought trade.
What else are you watching in the commodity space more broadly, Peter? Any commodity besides gold that you're watching to potentially benefit from here?
Crude's been fantastic, Ingrid, as far as those big washouts. You're getting, huge volatility swings. Traders are doing extremely well. Copper's been not a bad market to look at also. Base metals, they're very wishy-washy, but, you want to be on the big ones that are huge liquidity and big price swings. And that's where I look at, the crude market is just a wonderful barometer for really what happens in the world at the moment. I like silver as well. But keep a close eye on, gold and crude, I think, are the standouts at the present.
What are you watching at copper? Because copper's taken a lot of bad news on the chin of late. It's been a bit of an interesting play. What's your take on that?
I think it'll probably come off further. There's been softness, from an industrial demand aspect. I'm talking about shorting as well because, traders, it's a lot easier to, when markets are falling, Ingrid, traders are all over from a short side. So, it's been very, very profitable for many of the hedge funds and many different traders to do very well out of these falling markets. And the market's been hasn't been a silent one there.
As far as soft commodities go, if this lockdown around the world goes on for, potentially 6, 12 months, who knows how long, will there be a bit of a spike as certain countries find it difficult to get these staples for their food needs?
I would say so. I'd say, soy you're dealing with, and, likes of wheat and corn and a number of those other markets. There'll no doubt be some issues leading into Northern Hemisphere summer. You're talking about, how the crops are going. In the sense, are they going to be a strong crop? If you're looking at soil moisture, all of those aspects, and it's just a wait and see. But I'm sure that the demand picture, people are still eating, still needing foods, and feedlots and so on. So there's going to be a very strong demand, I think, across that whole soft sector.
All right, Peter McGuire from XM, always a pleasure to talk. Lots going on in your space. Thank you very much for joining us.